Welcome to our weekly Ask the Fund Manager series. The premise is simple. We put a fund manager on the spot and we ask them questions about current events and how these events impact on investment markets. We aim to keep it interesting and understandable and do this all in under 5 minutes. We hope you enjoy.
Over August, we saw markets continue to hit new all-time highs, with the S&P 500 surging nearly 30% since that market fallout from Liberation Day. I'm Saloni, investment specialist at Aviva Investors, and I'm joined today by Harriet Ballard, multi-asset portfolio manager. Now, as summer unfortunately starts to come to an end and the sun is no longer shining, Harriet and I thought it might be useful to give you a very quick summary as to what happened in markets over August. So Harriet, if you had to summarise the month into 3 key themes, what would they be?
Thanks, Saloni. Yeah, I think they would have to be earnings season, which we've just had. The fiscal concerns and situations mainly in Europe. And finally, the topic that you can't get away from this year, tariffs.
Perfect. So let's kick things off with our first theme on earnings, which really has driven a lot of that equity market resilience. So could you just tell us a bit more about that?
Yeah, you're right. The earnings have really boosted equity markets. In the US, almost all of the companies within the S&P 500 have reported their Q2 earnings now, and a huge 82% of them beat investor expectations, which is a big surprise, biggest since 2023. Technology led the charge, with information technology sector posting year-on-year earnings growth above 25%, driven by AI capex spending. The Magnificent Seven, including Microsoft and Nvidia, delivered strong earnings, and Microsoft Azure's program really stood out and reinforces confidence that AI spending is actually translating into revenue.
Oh, some really strong results there from some US companies. So on the flip side, how did European companies do?
A bit of a contrast. The Euro Stoxx 600 saw only marginal earnings growth in Q2, reversing its strong start to the year. Companies' earnings were held back a little bit by the strength of the euro and also declining energy prices.
Wow, so quite a big difference between European and US companies. So if we move on to our second theme, which is around the fiscal situation, particularly in France, could you tell us a bit around what's happened there?
Yes, in France, PM Bayrou called for a vote of confidence, which will take place next week, which is around the fiscal deficit, cutting proposals. The budget and the proposals will actually include getting rid of a number of bank holidays that, as you can imagine, not maybe that popular. But he wants to do this because France's budget is around 114% of its GDP, which is one of the highest in Europe. The vote of confidence is essentially going to be either in support of his plans to reduce spending or to support, in his view, fiscal instability. And that uncertainty has led to French government bonds surging to their highest levels since March.
Wow, so there's been some similar themes in the UK this week, with some really big headlines around the UK's long-term borrowing costs actually reaching their highest level since the late 90s. Now, what's been driving this surge?
Yeah, we've seen fiscal concerns be a real theme across a lot of developed markets, and it's led to a lot of curve steepening through the month. And the UK, has not been immune to this. So some of the rise in the UK yields is just partly driven by that broader global rise in bond yields. But specifically for the UK, we've had persistent inflation and rising public debt. And as a result, we saw gilt yields on long-term bonds rise to 5.7%. And so the UK's borrowing costs are now among the highest in the G7. And on the desk, we're looking at the impact of the increase in the borrowing costs and what it will mean for fiscal headroom in the UK and ultimately the autumn budget.
Right, so we've got that developing political and fiscal situation in France and in the UK, with quite a few key events coming up over the next few weeks and months. So if we turn our attention to the final theme, we've got tariffs, which has probably featured in every month-end episode this year. So we saw the tariff pause in August, but what's been the immediate impact of that?
Yes, so as you said, the pause on tariffs ended, and those new tariff levels came into effect on the 7th of August after months of negotiation, and that has generated over 100 billion in revenue to the US, which is one of the reasons that Trump maybe initiated the tariffs, but that income is unlikely to offset the widening US deficit, and that means that the fixed income investors continue to be concerned around fiscal sustainability. But before these new levels were implemented, the US secured 15% tariff deals with key partners, including EU, although countries like Brazil and India now face 50% tariffs, with India's rate split between reciprocal tariffs and a penalty for purchasing Russian oil. In China, tariff rates at one point were as high as 145%. They're now at a more palatable 30% under a temporary truce, but that expires in November of 2025. So there's still some uncertainty, but a global recession and the worst case scenario has been avoided, and strong corporate earnings have been supporting key asset classes.
So thanks, Harriet. And that all makes a lot of sense. And I guess to summarize, August was another action-packed month for markets. As always, I'll end this month-end episode with our stat of the month. So, as mentioned, Microsoft had such a strong earnings season that they're now the second company in the world, after Nvidia, to be worth over $4 trillion. Now, to put some color onto that, these companies are now worth more than the GDP of the UK, France, or Germany. So, some huge numbers we're talking about there. Thanks all for watching, and join us again next week where we'll be discussing another topic that's caught our interest.
Thank you for listening. We hope you enjoyed this episode, and we hope you listen in again next week. Also, we love to get feedback and ideas for future episodes. You can use the link provided below to share your thoughts. Before you go, just some important information to be aware of. Unless otherwise stated, any opinions expressed are those of Aviva Investors. You should not be viewing this as an indication of any guarantee of return from an investment managed by Aviva Investors, nor as personal advice of any nature. Information contained herein has been obtained from sources believed to be reliable, but have not been independently verified by Aviva Investors and is not guaranteed to be accurate. Past performance is not a guide to the future. This material is not a recommendation to sell or purchase any investment. The value of any investment and any income from it may go up as well as down, and the investor may not get back the original amount invested. Nothing in this material, including any reference to specific securities, asset classes, and financial markets, is intended to or should be considered as advice or recommendations of any nature.